Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're all welcome to visit the lab every day. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. And how we do it in YouTube. Oh, good morning. Okay, great. Well, let's get going. First of all, welcome to the Traders Lab. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis. It is also based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community, and of course the Trader Lab community, which is a group of like-minded traders who've come together to leverage their collective experience into something better. It is based on structured trades, of which there are 60 PDFs you can download. It is also based on a library of webinars that are curated, if you will, and are in the Bookmap Discord Trader Lab community, and of course the community, which is a group effort to leverage the experience of all the participants, from newer traders on up to more seasoned traders. Our senior trader has over 50 years. I have 45 years of trading, both professionally and, of course, out here with you in the retail space. So again, thank you for visiting the Trader Lab, and you're all welcome to the Trader Lab community. And if you're in YouTube, there is a link down at the bottom if you are interested in visiting the Trader Lab, and we'd certainly like to meet you. So let's take care of business and let's go on. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get there, we'll talk. The other part of this is, I always start the same way. It is a top-down, bottom-up approach. Top-down meaning higher time frame, and then the bottom being microstructure using concepts of the auction. The auction is really what the market is all about. It is not an indicator-based process. The market is made up of the participants, and that participant behavior can give us indications of potential rotational behavior, directional movement, and the context of the market changes from directional to rotational and then rotational to directional. And this is a function of time frame as you think of it. So we're going to go into a lot of different elements. However, in a short time that I have here, if you find this interesting, feel free to use the link in the bottom of YouTube if you want more. So let's get going. And thanks again for visiting the Trader Lab. Grab a pen and a piece of paper. Let's take a couple of notes, and we will go from there. Now, this is a intermediate time frame chart. Basically, it's RTH candles, and what you're seeing here is a breakaway gap. Then we have another gap. This is the day after the election, I believe, and Tuesday. Yes, Thursday, Friday last week. So right here is I'm looking at these 2 days, RTH days, and since they overlap and there's no gap, because this one's out in space, I put these two together in a profile. And what it shows, it gives me information. But now let's write down a couple statistics. Actually, no, we'll do that in a moment. I want to talk about this. This yellow line is the retail price. What does that mean? In an auction, the highest volume is where buyers and sellers come together. Now, the easiest thing to think of auction, which sounds so mysterious, is really shopping. And when you go to the store, you are participating in an auction. So it's really simple. Where is the price too low and where is the price too high? And then where's the high volume? So let's think of it this way. When the market came down here, and I think we gapped and that was like the low, and then we just ran, But right there, the perception was there was a change in valuation and that this price is too low. So when you go shopping, if there's a sale and the price is on sale and everyone perceives up here somewhere might be the retail price, because now the price of artichokes because of the freeze is going to be higher, and you can still buy some on sale, then or S&Ps, let's say, then the possibility is because of demand and this price is too low to go higher. Now, we come up here and then we spend time here. And what we're doing is we're kind of rotating right here, but let's just say this is now the retail price. So this is the new price where the maximum volume went off during this RTH day, if you will. That was Wednesday last week. Then we get follow through buying, another gap, and we go higher again. This yellow line here becomes, and these are called naked volume points of control. That's the terminology. All it means is retail, so don't worry about the vocabulary here. This is now the fair price. Most of the volume took place here. Then on Friday, we open again, we test inside, and then go higher, but then we close here. That sets up 60.25. That's the new retail price. So we have, this is the new price. This price is too low. This price is too low, and we're moving away. Now, let's keep going. One more piece. Friday. So Friday we were bullish, and if you guys follow the stream, it was really about profit taking on Friday. So that was anticipated, and all of you follow the stream know about that. So we were looking for some profit taking. End of the week, had a big run. Here we go. Now what? Well, there's a couple possibilities. So, and I want to give you one other piece to this before we move on. This is only 2 days. A micro composite, and these are just terminology, combines multiple days, RTH, and it combines the overlap. So we overlapped here. So what this was is the buyers are here. We had sellers here. This sets up the possibility for rotations. Now, of course, part of the joy of all this is what? The trend is up, and I call it pretty bullish. However, the market typically doesn't run in a straight line. And write this down. The market goes up to go down, and the market goes down to go up. And you'll see this in all time frames and fractals. So right now, in between these 2 days, the highest volume is right, make sure I got this, here, 60.25. So if we open, we can, of course, take out yesterday's high. If we open above, we can come down and close the gap and come down to 25. So we know in the higher time frame, of course, it can do anything. So remember that also. The business of trading is not predicting. It's anticipating potential scenarios that you are prepared for with a trade plan. And then either the market aligns or doesn't align. Got an alarm going off here on a power backup. That's not so good. Hopefully it'll stop. Okay, guys, let me now get back into Bookmap. One moment. A little distracted. It's like a fire alarm going off. I have a filter on this microphone so you can't hear it. By the way, this is what the trader PDFs look like if you want to download them. Circles, arrows, descriptions, why, what, how, this kind of stuff. And these are based on structured trades that you'll see here in the lab. Okay, there's 60 of them, just so you know. All right. Well, it's not easy doing this when you got an alarm going on. This is what our Trader Lab chat looks like, by the way. And there's a lot going on in here, a lot of interaction, charts posting, and this is what the community is all about. Statistics, research, and it's a great community. It's about the business of trading. The business of trading is a statistically based business. It's really based on gaming theory, if you will, probabilities. It's not based on prediction. You can't predict anything. If you think you can, you're probably not going to get the results you're seeking. And I know maybe it's only semantic, but we can't predict the outcome because everything is random. It's no different than how casinos operate. They can't predict the outcome of any hand or how the gamblers play the cards. So we're in the same business, whether you know it or not. The difference is, do you want to sit on the house side of the table or sit with the gamblers? And yes, the gamblers get paid, right? But over time, the house extracts the dollars from the gamblers because they only play games that have a vetted statistical edge. They don't know the outcome of their games. We don't know the outcome of our trades. If we approach it the same way, we're no longer going to be focused on trying to predict what's going to happen. What we're going to try to do is get in alignment with what is happening. And then by having structured or vetted trades, understand and accept, since we have no control over what other participants do, so we have, the only thing we control is what we do, not the outcome. If that makes sense to you, then I invite you to Trader Lab. If you believe you can predict what's going to happen next, then you're not ready for Trader Lab, just so you know. So, RTH open. Yesterday's high, Friday's high, I mean, RTH open. Now let's go look at a couple of things here. Don't want to miss these things. ETH low is right here. And remember the 25 I was talking about? The naked volume point of control and the settlement from Friday? I'm going to try. I try to do this so you can kind of see how all these pieces fit. There's the 25. And that's the highest volume for these 2 days. So this is a initial target, just so you know. And why, you ask? Because it's the last place that was a fair price. And it's right there. There's a 25. Now, let me give you some statistics. And you have to vet these for yourself. And this is all part of a trading plan or methodology to create edge. None of this predicts anything. But the more statistical probability we have, the more probable, using the term probable, it is that we will be able to lean in a specific direction. However, the piece that's number one in all this is something called context. What is the context? I just went over that in the higher time frame, and the last retail price was here. So the probability is to either get here or not and come out the top. Now, a little bit more. Getting to the overnight higher low has approximately a 93% probability to take out either ETH high or low. To get to the previous higher low, an 81% probability. Well, if this is yesterday's high, then filling the gap might be pretty good. Getting to the ETH mid has a high probability, but we're opening right there, so not a big deal. Getting to the previous close or settlement, about a 69% probability. Now, the ETH high has a 69% probability, but getting down to here has a 67% probability. So we're kind of favoring the upside, but the condition of the market initially was suggesting, well, either side, but possibly down. So you have to be prepared for everything. And there's one more thing here, if I can find it. Let me just see if I can find it. Overnight volume point of control. 62 or 42, I mean. Right here, we have the ETH, and I think it's right here, right about here, or 43. I think it's right about here. We have what's called the overnight volume point of control. And what that is, guys, can you confirm where the overnight volume point of control was at RTH open? Might be covered up here with something. Was it 42? 42. Okay, thank you. So right here under this open is something called the overnight volume point of control. It's the same as that naked volume point of control. In other words, it's the retail price. So, and here it is. Thank you. The thing about this is This was the last auction. So let's just come back conceptually, then you'll see how the pieces fit together. Down at 25 was the retail price from Friday. In the ETH, the retail price, the last auction was 42. So the retail price is moving higher. So that suggests maybe this might be too low, but there's another piece here. Whoops, sorry. We have the ETH low, which I think is covered up again. And then we have the ETH high, which has a higher probability. But now let's start. I hope I got the right numbers out there for you. I want to move on. Now, in the Trader Lab, we have structured trades. Now, this trade, I suspect, could be problematic for many traders. The trend is up. Now, I'm looking at this and I'm thinking the trend is up. But what else do we know? The market is long. We haven't had really substantial rotation down to take out the weak longs. We can anticipate buying early on the open, maybe, maybe. And if we get early buying, and this is an opening trade. Now, this is more complex than what I typically, I should say, let me put it this way. This is an advanced process that I'm going to share with you. And I always suggest in Trader Lab, this is not where you start. As far as you start developing and vetting trades, but you don't start live trading here because this is much more advanced, much more complex, and you really have to have all the other pieces down to be able to extrapolate what you're going to see right now, because it's very counterintuitive. Because we have something, a structured trade that's called VPOC migration, but it's only a piece. The thing I always talk about in Trader Lab is there's something called context, which is number one. And the problem for many developing traders, and for all developing traders, depending on how much time they've been developing, is getting mechanical. Because you can have mechanics for certain elements, but you got to know the condition of the market. The market is long. So if we get early buying and the market is long, what's going to happen? Possibly, and this is always the thrill, possibly in a random environment, the early buyers, their stops will be under the opening swing low, and then the early buyers, and we can go up and look like it's going to the moon, and you might, if we rotate back around, then the stops that are under the opening swing low and the longs that are in here from Friday may get shaken out, the weak ones. So that would set up what? Do we want to get long? Or do we want to use the context of the current market behavior? And this is very simple. It's the following. The market goes up to go down, and the market goes down to go up. What is that all about? Besides being obvious, it's because as traders we get myopic and we don't remember that if the market gets too one-sided on either side, that there's fuel on the opposite side. So if the market opens and goes higher in a bull market, why? It's either going to gap and go, or it's going to open. You'll get follow through buying, and if that buying exhausts, then all the stops below become the fuel, and the market runs out of buyers, and now it's going to find sellers, which are the sell stops, and new sellers. Then we go down, think of the logic, and now we have new shorts in the market, and we have long liquidation. So we have sell stops taking it down, new sellers taking it down. If the long liquidation is over, then the new longs come in, squeeze the sellers, which become buy stops or buyers, and we go up in continuation now in alignment with the trend. So the market goes up to go down, and the market goes down to go up. I hope that makes sense. How are we doing in YouTube? Hey, GoldenEye, hi there. Welcome to the Trader Lab. And everyone else is new in Trader Lab. Thanks for coming to the lab. And there's such great camaraderie in there and leverage. What's leverage? Traders working together, solving questions, generating statistics, posting charts, sharing ideas, debating ideas that are time frame related. So let's look at the opening trade. And by the way, if you're visiting in YouTube, please give a thumb up, a like, helps other, and subscribe to the channel because you don't want to miss out. A lot of what I do is exclusive for Bookmap Discord Trader Lab participants. If you want to participate in a community, there is no cost. You're all welcome, but use the link in the bottom of YouTube, and you need to confirm your email address. Make sure you're not a nefarious individual. So this is called VPOC migration. Now I'm going to show you my trades, and these are basically structured trades. I don't talk about other trades. Sometimes I do, but mostly I want to stay in structure. So this is called VPOC migration. RTH open, there it is. I have a high probability, remember, ETH retail price. So what am I doing? I'm opening in something called balance. Balance means two sides are active, and this is from the ETH. So that shows me that I have two sides, and I've been mean reverting in the ETH. So ETH shows me two-sided trade. I can, there, you see so here's the ETH coming back to VPOC. That's mean reversion. In fact, I posted in Trader Lab that there was a short somewhere coming back here, but I can't remember where. It was around this time. That's neither here nor there. It's all in the chat. Now, back to RTH open. So the reason that's as important is that we already know the condition of the market before RTH open, that it's two-sided. So if the ETH is short, then we can anticipate squeezing those shorts, getting new longs. And remember, the retail price in ETH is here, and now I'm looking for shorts. Now, this could be difficult, of course, because not only is it random, but the first trade coming out of the chute is a structured long in a vacuum. That means ignoring everything else that is taking place. That is the condition of the market, the context, which is long. We haven't had a significant counter rotation other than Friday profit taking, which means there's still longs, and also new longs coming in. That's why I'm looking, my first trade is short. And you're going to go, why'd you do that? For the reasons I just stated. ETH in balance. So now mechanical traders are not thinking context. And I understand it's like a plague because it happens to all of us. So this is the overnight volume point of control. Retail. Watch. Now, RTH open. So I'm looking at this right here and I'm going, this looks like, and I get my migration right here. So open, this is now the retail price. What is this yellow line? It's the same as that naked volume point of control I was showing you, except a naked volume point of control is after the market's closed. It's fixed. That's where the high volume was on Friday, down at 25. This one is the same thing, except it moves with the volume because it's a developing volume point of control. So I'm looking at the volume, and I'm going to use the volume to try to gauge what's too high, what's too low. And I like to use the term clueless because I don't know. And clueless doesn't mean ignorant. It means be patient because this is the retail price. If this is too low from the ETH, notice where I test 42. That's why that statistic is important, not for targeting, for behavior. What happened at 25? Too low. What happened in the ETH? Market got short. And where are we opening? Above it. What does this say? Maybe too low. Are you guys tracking? If it's too low, then what? If this, then that. If it's too low, then that. So if ETH VPOC is too low, then that. This is the auction. So, okay, going up. Now, immediately my brain is going, maybe you should be getting long. But the other part of my brain is going, no, wait, be patient. Don't FOMO in. Let's look here. So I see my test here. That's door number 1. Or it's piece number 1. If I get below here, 25 is my potential target. If I stay above here, clueless, wait and see. Micro high volume structure is here. Now I'm going to go down to what's called time frame or fractal. I don't use time. The clock is not part of this. I use structure. So for me, whatever it takes for behavior to take place is my quote time frame. So I'm not in a rigid, I don't think rigidly at all. So let's look. If this is too high, what do I get? Absorption, delta. I have a passive buyer here. I've got passive buyers here. Why? Why do you say there's a buyer here? How about why is there a buyer here? Let's go all the way back here, order flow. You see nothing here. I see delta. I see a seller. That's lovely. And we're going to go to 0, except I've got a location. I see buying aggressors here. And I see absorption here, and I see a stop sweep. Why didn't we go down here, you ask? Well, delta is market orders and sell stops. That's a stop and iceberg detector. So I see the stops. I see the aggressors. Stops become market orders. It's delta. Why does the market go up? Because this was absorbed, which I don't know at the time until I see this. And the passive side is sitting here. That's the limit order book. We don't see them. What's a limit order? Yeah, if you come to my price, okay. Otherwise, don't bother me. Limit. So limits, passive side, we're absorbing the sellers. That's how you got to look at this. Aggressors into passive. And it's like Pac-Man. Just so you know one way to relate to this. Pac-Man. Now I get my buyers. Here I have a seller. Icebergs are absorbing these aggressors. So the question becomes 547 sell icebergs, limit order, into this delta. And there you see it. This is called the absorption detector. I'm showing you some tools. This is what I use. And I'm a minimalist. I got to tell you, if I don't need it, I don't look at it. Because anything that's superfluous, quote, to create confirmation, actually does the opposite. It creates conflict. So while most retail traders are looking for confirmation, I'm just looking at reading the order flow. There is no confirmation. Hindsight is your confirmation. How does that work? So for me, I don't have hindsight. I have maybe. So I live in the world of maybe. No different than the casinos. So this is the retail price. The sellers are there. We take them out. That says going higher. But when I come up here, let's look at the other behavior. I come up to this consolidation. Now I've got buyers. Wouldn't you think it's going to go up? Me? I do. But what do I see here? Absorption. Now absorption can happen anywhere. And I see selling icebergs. I see buy stops coming off. Okay. And we're going to go up. What happens here? It goes down. So what do I know about this? Too high. Now I'm thinking, okay, maybe we're now going to take the stops out under here. Now I'm in minutia, I know, but once you see this, you'll see it all because it happens in all time frames or fractals. The high volume is up in here. I'm just going to put a little line on here for us so we don't forget where it is. This is called the variable high volume node. I made these terms up when I started doing this. Nobody was doing it, which doesn't mean anything. It's just nobody was doing it. So I said, well, a VPOC is high volume, and if it moves, I guess it's variable high volume. So it moved up here. In the shopping experience, what this is saying, overnight VPOC, which we can't see, I'm going to just put it in here so we don't forget why this is important, because it's covered up. So this was the retail price, too low. This, it was a retail price, too low. This is the current retail price. I'm going to label it. So what you're seeing in microstructure is I am tracking the change of price and volume together. Volume is the shopping experience. Trading is shopping. And what's the purpose of the market? To try to figure out what's too high, what's too low, and what's a fair price. And so since we're in a developing daily time frame, that pricing is changing. And what we're trying to do is align with maybe what's too high, what's too low, and whatever. So let's watch. This was my first short. I come up here. This was too high. This is retail. Too high, retail. Too high, absorption. So what I did here is I had sellers here. There's the icebergs. And I know I'm in micro and minutia, and I can shift up, but I want you to see how you narrate the behavior. So buyers here, absorption, downside rotation. Pac-Man ran out of buyers. Come down here. Where is support? It's there and there. Come down here, too low. Come back here, too high. Come back here. Notice where we're testing. Too low, retail price. It's an auction. What about now? I could understand where traders in Trader Lab will get it long here. I can certainly understand it, but I'm thinking a little differently. I'm thinking, now, watch. This is the retail price. Volume point of control, developing volume point of control shifts higher. Going to the moon, Alice. Except, watch. Let's read the language. So in this time frame, and we're only in 2 minutes, remember, overnight volume point of control, too low, and RTH open. Test, too low. Retail, too low. Retail, too low. Microstructure, fractal, going down in time frame, too high, too low, too high, too low, too high, right? Feel like you're banging your head on the desk? Shift higher. It's either going to do this, same as this, same as that, same as that, same as that, same as that, same as no. So I got short here. That's me. I'm not saying anybody else should do that. So short, and then where am I trying to go? Where's my stops? Right here, under this opening swing low. And this is an opening swing trade. It is advanced. Now here's a couple more entries for you. Come down here. This was my scale right here. Pull back, teeth chatter. This is too high. Variable high volume node. Watch the structure. Break low. Now, and I know there's another stat. You wrote it down. Maybe I didn't give it to you. And you have to vet these for yourself. 72% probability we're going to go here. And there is a, let me find it for you guys, just to make it more fun. And this is how Trader Lab works in some ways. One moment. I got a lot of statistics I'm trying to go through here. Whoa. There's an 81, almost 82% probability that we take out the previous RTH high or low. This is Friday's high, yesterday's high. So with over an 80% probability to fill this gap, if you will, if I get short, is it reasonable to you that I would be targeting yesterday's high? So this is part of the basis for my shorts, because the market's long, right? All the reasons. I have a high probability of getting here and a high probability of getting to yesterday's high. Now there's more. Really? Yes, there is. Let's watch. Overnight low. There is a 93% probability we'll take out either the ETH high or low. Okay. And remember, I'm looking for the market to go lower, and my target is this, that 25 that I shared at the top of the stream. Now, I know I'm in micro and we're only talking 6 minutes of trading, but you can learn a lot, I think, from understanding how the market works, why it does what it does, how you might get in alignment with it, and then it's still random. So in the language of the market, this is too high. This is too high. We come back here, VWAP mid. I get VPOC migration. That is saying too high. VPOC aligns here, which is aligned with that. Think of the shopping experience. I'm not paying that. And you leave the store. Now we come back here. We check that. That was too low. You know, support resistance. This is too low. Too low. Now too high. Break low. Now we come back and check. Is this still too high? Yeah, it is. This shifts down to there, which was too low, becomes too high. And you got VWAP and, you know, whatever. And off you go. Fill the gap. So what I did is I had the short. I got my scales, and I'm going for the ETH low and the naked volume point of control 25. That's my trade. And I got taken out of my short. And I'm going, you sons, you know what I'm doing. So anyway, this is the retail price. Opening swing high is here. This is the variable high volume node. It was too high. Watch the behavior. We test here. We pop the stops. What do? 3,000 icebergs come out of the closet. Where? And what's above here? Same thing that was below here. Stops. We pop the stops. Same thing. What do I see? Icebergs here and here, right? So I know this is a weak high. I come back. I take them out. There's my buy stops. Thanks for playing. This is when your broker sends you a coupon to the buffet and a gift basket. 3,000 icebergs. Pac-Man again. Sellers absorbed. Right here, VPOC migration. This is our new retail price. We're going to label it. So I'm going, what's going on, right? But this is where, again, where the stop and iceberg detector is giving me insight. So I see absorption here, and I see my 3,000 icebergs. Now, 3 icebergs, 90 icebergs, okay, that's nice. 3,000, it's like a frying pan to the face. Oh, something's going on here. This is now the retail price. As soon as I break under it and I come back, what do I know? Right there is too high because I don't get above it. I break below it. I pull back. This is micro high volume structure, and this is a short. I take another short. And now I'm going, And I'm also posting in Trader Lab. Guys, you know, be conscious. And under here is the ETH low. Now I'm going to show you this because that was my target. So what I do is scale, get risk neutral, and then trade the targets. So I had 2 targets here. This ETH low, and then that, the 25, which I showed you at the top of the stream. This is how, at least in my opinion, you trade. Or a way to trade. Doesn't mean what you need to do. But this is all about understanding market mechanics, how it works, and why it might do what it does. We get VPOC migration. Now, we got to follow a process here. Let's see what's going on. So we drop down, and what that says in the shopping experience, and that's what this is, shopping, you know, this is the new retail price. And what creates this is there's more volume here than there was above. So now everything above us might be too high. Now, the other thing you got to remember in this is an active auction. So what the market does, it goes and does its thing. And if this price becomes too low, it'll go back and check what might have been too high. I mean, this is a dynamic situation. So let's watch. This drops down. Now, the preferred behavior for me is this. Push off of this and continue down. What does it do? It does the other thing. Now, this sets up a different context inside a context. Let me explain. The market typically is rotational and directional. and it changes from rotation to direction and back to whatever. So subject to your time frame as you think of them, and again, I always say fractals because time is not material for me. In the fractal, if this becomes too expensive, this yellow line, we're just going to keep looking for too low. And I have a high probability statistic. I'm going to take out either the first hour's high or low, and who knows which one, but it appears we're heading south because remember, the market goes up to go down, and then the market goes down to go up. So right here, I'm holding short and I come across. This right here tells me that I'm going to come out and then possibly come back in something called mean reversion. And not to confuse you, but getting to 25 in a higher time frame is also mean reversion. So it's outside in, and this is the same outside in, and call it a higher time frame. I hope that makes sense. If it doesn't, ask a question. So once I come across, then it's pick the stops for those who are trailing and then look for it to come back and come across, or reverse and squeeze the heck out of everybody, including me. So let's watch. So comes outside. I'm holding. Teeth are starting to chatter. You know what I'm talking about. Now watch. Right here, and we talked about this in Trader Lab, right here is the next target. There, ETH low. So I always go a couple ticks in front of it. So that's the next scale. So the short was up near the high of the day to here. I'm okay with that. How about you? And remember, the probability of taking either the ETH high or low is about 93%, and you got to vet that. So if I know that, and here's one more. Not that it's that material. I'm going to give you the next one. The probability of taking both the ETH high and low is about 25%. So my probabilities, and by the way, the probability of taking the ETH high was higher than taking the ETH low. But, and the but is, what was the condition of the market? Long. What happened first? Buyers. What's under those opening swing low? Sell stops. What's the condition of the market? Long. What's going to happen to some of these longs potentially? Under the bus. Thanks for playing. We're going to send you a nice little gift basket. So now this is the next target. Now I want to show you what happens here, because I looked at this and I know other traders in the Trader Lab use this to get long, which is fine also. Me, not so much, but that's okay. Doesn't matter to me. I just follow a plan. Notice the absorption. Remember talking about absorption. Here, let me open this up for you. I want you to see how these tools can really help you. So we're coming down, going to zero. Isn't that what we think? But what do I see? Coming down. Now right here, I see a little absorption. That's the iceberg. I see iceberg over here. Okay. Statistic. Target. Take a target, and I got one runner left for 25. That's my target. And it doesn't mean we won't get there. No idea, not my job. I'm not in the prediction business. Look at the absorption here, though. And I got 1,400 selling icebergs, which is a big deal. So I got all this selling going on here. Big selling. So you see this huge volume going off, all kinds of crazy. And I see the absorption. So these sellers, 661 sell stops, 1,400 sell icebergs. This is an extreme. Now, I don't know what's going to happen here. We could just roll right through this. But what do I see? I see the absorption. I see the big volume going off. I see the buyers on the other side. So you got 1,400 versus roughly about 1,400 here. So, and 661 sell stops. Now I have a picture. Okay. Now, let's go a little further. Market comes down, so it still looks like it's going lower to me, right here. So at the moment, it looks like the sellers won this exchange and overpowered the buyers. But I know there's tons of buyers here too because of the absorption. Now, the question becomes, who's going to win this thing? Is it these guys who bought, or these sellers. You know, it's kind of like a shootout at the OK Corral. So I'm waiting for 25. You know, I don't know. So this is my next target and good probabilities of getting here. Not a recommendation, right? So watch. So, and I'm just managing my trade. I don't know. You know, I wish I knew. But I haven't figured out how to know. Still working on knowing. In fact, I'm not working on it because I gave up a long time ago and I accepted I don't know. Right here is a swing high, break, test it, VHVN, too high, break low, microstructure, too high, break, microstructure, test, too high, the big absorption, break high. Right here, it's like, uh-oh, this and especially this. I got taken out over here. And I'm done. Then I go, that's nice. Now, the other thought, of course, is maybe I should have got long, right? So let's watch. Maybe I should have got long. Where's my resistance? There. Let's go back. What do we know? We know this is too high. We know that is too high. I'm going to throw a little line on here just so we have these things, so it's a little easier to see. And I know this is too high. But right here, let's just look at this. So there's the counter rotation. And what I'm seeing here is, well, I got two-sided trade. So it's equal opportunity to get, you know, for head banging. So let's watch. Where's too high? There. Microstructure, break. Now, right here, I'm just sitting here because I have no idea. For all I know, we finish with the shorts and we're going to come out the top, which would be reasonable. I am not long because I don't know at this point whether we're going to stay in mean reversion. So the context currently is outside in trading. So for me, there was no long because I'm suspect. Watch. If you took a short here, you're going here. If you don't have a read on this, you have nothing. This is mean reversion trading. This is a short if it's in your plan. And you have to be advanced to be able to read this. You're referencing this. You're referencing this microstructure. If you took a short, you're going here. So let's say you don't take a short and you're going, oh, what's going on? Watch. Too low, right? Where's too high? Here and here. Let's watch. Test. So too high, stops are going to be here. If I take a short here, my stop goes there. If I get short here, my stop goes there. And then where am I trying to go? Back here. It's called mean reversion. So all this is for me is outside in trading, rotational trades. And my statistics are open. 25 below and whatever. As far as the top side goes, I really don't have anything other than that. So I don't have a long. I have shorts. So for me, I have not taken a long today. I've only been on the short side, and I'm going for that. That's been my all day. You might find it kind of weird, but, and I could be, you know, it isn't about right or wrong, guys. I really want to stress this. In trading, the only way you measure, quote, right or wrong is, do you follow your trade plan? The outcome is always random. There is no perfection in a environment you have no control over. So if you're interested, you know, the thing about the Trader Lab is straight oil from the can. And you know, it was funny. I went out, where was I? I think maybe YouTube. And I think it was that. And I came across, you know, all these streamers and all this stuff. The only thing you need, only that, you know, or all these courses. And that's what it was. I was looking on the internet for courses, trading courses, right? Because I don't look at that stuff. And I said, I wonder what's what. And I just saw all this crazy stuff. $1,800, $600. No, the only thing you need, be such and such bandit. I mean, appealing to everybody's fantasy. It's a crock of, So, and it really annoys me. And that's one of the reasons when Bookmap asked me to do Trader Lab, or, to stream, and I created Trader Lab, that is because of the nonsense. I mean, you guys are trying so hard, and you're going to chase this illusion that the marketers are very adept at trying to get you to send them your dollars for garbage. Now, I'm sure there's good stuff out there. I'm not going to say that's not the case, but I'm going to say for the most part, junk. So, because it appeals to our FOMO, hey, if I can just do this one thing, it says, the only thing you need, let me buy that, or let me get that video course. Have any of you done that? I'm going to suggest come to Trader Lab. You don't need to do that. There's no cost in Trader Lab. Why would you need to do that? Ridiculous. Sorry if I sound a little biased, but I'm doing this 45 years. And when I started out, we had a different problem. There was no information. But I do remember early on spending over $100 for a book. And there was nothing I could use out of it. But I was so desperate. Now, back when I started, we didn't have PCs. We didn't have an internet, so the only way you got information was through a book or going to seminars. So that, was pretty difficult. And we still had the same junk then. It just was a slower moving train. Now, with the internet, you're overwhelmed. So I really think you have to not bite on the fantasy. There's this thing called snake oil, and I like to think that there's been snake oil around as long as there's been snakes. It seems it's part of the human condition, either to entice people to spend or to trade their whatever they have a value for something that's just fantasy. This is very two-sided trade today, guys. By the way, if you have questions, please post them. I'm going to take a look now as long as we're waiting here. This is a specific market condition called mean reversion. In the Trader Lab, if you're in the Trader Lab, you would know the condition of the market, assuming you did your work and you vetted a trade plan. The idea of Trader Lab is not to do what I do. There's in the Trader Lab, there's traders who are long, other traders short, and others that are just sitting there and having breakfast. Other traders put a trade on and they'll hold it for the whole day and ride through these. Other traders are going to be selling this and buying this and mean reverting, trading the rotations. If there's no range, guess what? There's no trade. Unless this is your time frame. I don't trade in this. And I'm just going to tell you, if I do trade in this, it has to be further outside because I need the range for risk reward. So if I'm going to trade mean reversion, which is to here, then I've got to have outside range. My risk is pretty constant. So if I'm going to put risk on, I'm not trading from there to there because my risk is going to be out here. I want to be out here with that kind of risk to come back here and then to come out the bottom. Does that make sense? How are we doing in YouTube? So this has all been shorts for me, guys, so no longs for me. By the way, you could be long. You could be long from here. This was a viable long to squeeze out the shorts, you see, if that's your plan. I tend not to flip around that much. I try to stay aligned with the side that's weak. What I mean by aligned, trading into it. So for me, the side that's weak is the long side. And it's only intraday. It's not in the scheme of things. I can't say that we have the high of the move in. I've been talking about a blow off top. Not my job to predict anything because we can't. Casinos can't predict the outcome of the next hand. So please don't think you can predict the outcome of the next trade. Remove that from your thinking and you'll go a lot further in aligning with the actual business you're in versus trying to fit this business into your psychological needs to be right and to predict. That is what it is, by the way. Our psychological wiring is to avoid risk and uncertainty. If you're operating in an uncertain environment 100% of the time, how can you then get certainty? How about it doesn't exist? Well, if you cannot get certainty, then you've got to learn how to operate in 100% uncertainty. Casinos operate in 100% uncertainty as far as the next hand, you see. So if we operate in the same environment, let's use a successful business model that is proven, which is gaming, and overlay our structured trades in place of the games that the casinos play and approach it the same way like they do. They only use anchored inputs. And I covered this in my primer webinar. It's available in the library, in the Bookmap Discord Trader Lab community. I talk about anchored inputs. Most retail traders are using a combination of multiple time frame and multiple inputs, multiple indicators to try to compress out risk and create certainty. If that's you, listen closely. That is not, in my opinion, the path to success. It's the path to conflict, ambiguity, inconsistency. And the casinos do not operate that way. They operate the opposite way. Minimum inputs, consistent behavior. They just play the games exactly the same way. And the only way they extract dollars from the gamblers is by consistently executing their games and not being emotionally attached to the outcome. They can do that. We have a real hard time with that. And that's because our primal wiring is an obstacle. So we tend to try to fulfill our subconscious and primal emotional needs and wiring through seeking certainty. The problem with uncertainty, which is 100% of the time, is we're wired to avoid uncertainty. Is the saber-tooth tiger behind the tree? Well, I'm not going to go and find out. I'm going the other way, you see. So in the outside world that we live in, other than the trading world, there is a fair amount of predictability. Red light, if you go past a red light, there's a pretty good chance you're going to get in an accident, so you don't do it, hopefully. If you drink, you don't drive. However, in this business, the chemicals are like drinking. Your hormones, fight and flight, your cortisol, your stress goes up, and you're stimulated to take action that is not aligned with this environment. By the way, taking out the first hour's high or low, over 90% probability, past performance not indicative of future results. And if I was not streaming, where would my target be? Here, same trade. So this is all I've done is take shorts. And if I wasn't in the stream, I'd be short. That's as deep as this gets. Now, you could be taking longs. Me, not so much. So traders in Trader Lab will take longs. I'll take a short. They'll get short. I'll take a long. Does it matter? No. Because each trader develops an edge and they operate in their own fractal or time frame. My time frame is this kind of thing because I like just to put the trade on, and if it's not broke, I don't need to fix it. Then I'm trading statistically, and I try to stay in alignment with the context. This context thing is where the challenge is for us because it changes. So you not only have to be in a random environment, you have to be in a narrative that allows you to detect change. Now, here's where we had our buyers, right? So the following, here's the possibilities. If the buyers came for it down here, then it's possible we'll have those buyers come back for it again over here. The other part of it is If we get our buyers here and we run out of buyers, what do we know about this low? There's sell stops right under the low right here. That would keep me trying to stay in my short because of this 70% probability. I think that's about what it is. Let me look. 67% probability, past performance not indicative of results. So if I'm only on the short side, I'm looking to come out under here because I have over a 90% probability to take out either the first hour's high or low, and I couldn't tell you which one. I'm leaning south. And if I get under here, then to here. That's my trade plan, not a recommendation. It could be, the outcome is totally random. I am comfortable being short because of the context. And I also understand that if I don't take this out, the current shorts will cover and I can potentially come all across the range and take out this high. I also know that. So as long as I know those possibilities, and that's what I live with. I also know it can do anything. And I also know right now I'm going for this and this. We'll see if that happens. Now, there's another piece here. Let's go a little further. This is my primary target. This would be a tertiary target. But this is where, for me, if we get here, my trade would be done. I'd hang up my holster and hang out. And then if something else develops, I might continue trading or I'd be done. I don't need to do anything more than this for me to have a day that's in alignment with the trade plan and what the market offers. I do not make the market give me what I want or need. I try to align with the market and accept what it offers that's in alignment with my trade plan. So there's days where we have outsized days because there's outsized range. There's other days where we're just sort of at the miniature golf course here and we're just putting. I'm not sure this is putting, but, look at the range here. You are talking, over 10-point rotation here. I'm good. And I don't trade one lots. And if you're in Trader Lab, you probably aren't trading one lots either. It's a minimum 2-lot configuration in the Trader Lab. Job of the first contract minimum is to buy the stop for the runner. Then it is targets and trade management. If you're not doing that, then you're going to be subject to Hyde, Jekyll and Hyde. Hyde's the lunatic. That's the emotional being. And our fear, by the way, fear releases hormones, the fight and flight thing. So it's all chemicals. That's like driving drunk also. You got to learn to recognize the triggers of these chemical states, how they alter your intentionality and cause you to do things that you have no intention of doing, like bailing out, or you miss a trade and then you FOMO in. It's all chemically induced. You come to Trader Lab, you're going to learn things probably that are quite different than what you've been exposed to. And we're all at some point become aware of these processes in our wiring, but we don't yet put together what we need to do to interrupt them. And there are tools, and that's available in Trader Lab also. Now, do you guys have questions? I'm going to come up. Thanks for your patience. JT is asking me in Trader Lab, good question. Quite often the RTH VPOC shifts at about 4 p.m. Central EST, 3 p.m. cash close. Do I have a rule? Yes. I go to RTH close. So wherever the RTH ends, which I think is 4 p.m. at this point, that's where my volume goes. So it's just RTH. Wherever that is, that is. So if it closes at the last second, that'll be what I use. But I also take a look, if it just does it at the last second, where was it previously? Because that's high volume also. Just depends, really. Yeah, but most of the time it's just end of RTH. Now, by the way, guys, there's something to be thinking about. If we're in mean reversion, this is a question for Trader Lab. and we take out the first hour's low, the IB low, which has over 90% probability we take out either the first hour's high or low. And I would say, considering we're in rotational trade, I am leaning for this, about a 67% probability we get here. So everything for me is lining up to go here. So that's why shorts only. But here's the thing for TraderLab. If we take out this IB, what is the next structured trade? Yeah, JT, it's just which one? Hey, TraderLab, let's see. If we take out this right here, what is the next trade? We have two structured trades in the TraderLab. One is called the IB continuation trade. So we can go after more stops down below. TraderLab? Okay, here's the question. There's two structured trades that I've shared in the TraderLab. One's called the IB continuation trade. You break here, you come back in and you test, and then it's a continuation. You'd be going for this, which, on its own is not enough range, right? Look how close. And then for this. And this, just so you know, just point of interest, has about a 58% probability, theoretically speaking. So what are the possibilities? IB continuation to there, which is not qualified. Well, it might be, but the only range you have is from here, 28 to 25. That's not a trade I can take. And if we clear this, then possibly to here. That's door number one. The other possibility is come out, come down here somewhere. And if you come across this, it's called mean reversion, underlining the word mean, because it is mean. And you're trying to find an outside edge. So if we come out here, come back, then you're going long back to here and to potentially come out the top or not, or at least get back here, squeeze the mid in the VWAP, and then you got to see. And what you're doing is this. So we come out, take out the longs. And again, it can go much further than we think. So remember, it's not predictive. It's what will you do? Trade plan is you anticipate to participate. You can write that down. You do not predict anything. Because if we could predict anything, I'd just skip the trades that don't work, as you would. And I'm sure the casinos would skip paying the gamblers. But they pay the gamblers. So the gamblers come back. And how does a business see payments, expenses, overhead, cost of production? How do we see losses, personal failures, lack of prediction, needing to know? How can you? You can't. Write that down. Reframe your beliefs. You're not in Kansas anymore. You're out here in a random environment. You're a developing trader. You must understand the business you're in. And that's what the TraderLab is all about. Why does the market do what it does? How can you get in alignment? Why does it behave the way it does? It is not based on your indicators. Your indicators have a place. What is their place? How about last place? If you don't know why, then how can you use something that's like Google Translate that has no understanding of how the market works? If you learn how the market works, then can you use an indicator to help you? Maybe. I don't use them. Why? Simple. My indicator is what's happening right there. Because instead of having a mathematical representation of an output of price, I am reading the price with the order flow and then the structure. So I am the indicator. because I'm translating. All an indicator is a translation. But but the problem with your indicator is it is clueless. So you're looking to the indicator to translate what I'm translating. The difference is I understand how the market works. The indicators have no idea. So if you're using that process and curve fitting and trying to fix it, I did a webinar on that called Trader Groundhog Day because it was me years ago. I did the same thing. And here's the other issue. Everything works at times. I mean, gamblers win and trades work. If you had nothing and you only flipped the coin, and there is a thing called the coin toss test, you'll have winning trades. You can even be profitable just flipping a coin. What does that tell you? Random. So what do we want to do? Accept randomness, but not layer randomness in our behavior on top of a random environment. What we should be thinking about is anchored inputs in a random environment. So we are not random. The environment's random. Our losses are overhead and costs of production. How do we determine that? Because we do the work, so we only interact when we have a structured, vetted trade plan or a statistical edge. Blackjack has a statistical edge. Okay, I got my icebergs. I'm getting under my first hour's low, which is a target. This is the next target. And then we got to see. These are not trade recommendations. If you're in Trader Lab, these are Trader Lab trades. So you'd be, well, I don't know what you'd be doing. I know what I'm doing. And it doesn't mean anything. Because subject to time frame, you could be buying it here, scaling here, going to the moon. It fails. You're using trade management. You're getting short. You can be getting short here, there. These are all Trader Lab shorts. This is too close. I can't do anything here. So I'm just managing the trade. As long as it's not taken out, see the sellers, and now we get some buyers here. Notice the sellers, absorption, sellers absorbing these buyers, sellers absorbing these buyers, passive side, icebergs, south of the border, take out the first hour's low, over 90% probability, 67% probability coming over here. Why would I be long? Just curious what you think. RP, yes. RP is asking if we test a naked volume point of control. Yes, the next trade for me, not a recommendation because it's subject to, which means a lot. I got to see structure. And if I don't get good location, I don't take it. Is first of all, coming under here, coming here, maybe coming under here. Possibility of this. I mean, anything can happen. Can go lower. These are levels. They are not walls. There's no precision in trading. There's a lot of slop. That's because of velocity that's created by stops. There's 289 and buying icebergs. That's the absorption. So what we need, so here's what we know. We had aggressive buyers here. First time we came down here to the overnight low, and you got this reversal. We got the buyers here again. This is important. So here's the possibilities. We come down here. These guys over here are going, oh, really? 6,000 here. I can buy it on sale, and they start accumulating. Icebergs are not the reason to get long. They are an indication of interest. What we don't know is, do we keep going down and there's just more icebergs, and then we exhaust and there's passive absorption, and then we reverse? So the question was, would I get long here? You might even be getting long here. Not a recommendation. I just sit and wait. I am not compulsed. Me, 45 years of doing this, I have learned patience. And I've also learned that if I don't get long here, because I have a 67% probability of getting here, that if it doesn't come here, I can live with it. And if I don't take a long here, I can live with it. If this is too low and I come back in here, I can come here. This is my range, 29 to 35, 6 points. Or do I want to take risk out here, 25 to 35, 10 points? So when I'm looking at this, I know this can be a long to there. It's not a trade, that I'm not calling trades, because why take my stop? You can take your own, I'll take mine. Or it comes out here, and then if I see absorption and I get a triggering structure, I'll put my trade on to come back through here, and I'm going there. That's my trade, and maybe there, and maybe even out the top. I don't know. Not my concern. The primary trade is called mean reversion if it sets up, and this is the primary target. That's the mean. We also know that shorts in this leg have stops here and here. So there's buy stops sitting above here, market mechanics. If I get along and I come here, I'm going to have stops at VWAP, mid, and above this swing, and chances are back to here. But I would be monitoring the trade. So if I get long, that's my trade. If it falls out the bottom and doesn't look back, I'm just going to sit here. My trade would be to here, because I play statistics. Does that make sense? Please give a thumb up if you're visiting in YouTube. Give a like, subscribe to the channel. I'm not a vendor. There's no cost for this. There is a link in the bottom of YouTube if you're interested in visiting the Trader Lab community. It is serious. It's not romper room. This is about the business of trading. We have traders in there with all range of experience, from newer developing traders to very seasoned traders, and a confluence of methodologies. So there's not a right or wrong way to trade. Nobody's going to tell you you're doing it wrong. Notice the icebergs. Notice the icebergs. Might these be the same buyers from over here? Let's watch the behavior. Very important now. And remember where our target is. And that's not a recommendation. The market never has to go there. What we're seeing is buyers. So your antenna ought to be alert, and we'd be looking for structure. And I'm just going to start labeling some structure, not a recommendation. Too high, test, right there. Too high, break, resistance, break, support, break, resistance. So resistance. This is called fractal trading. It's more advanced. Watch what I'm doing. What is this? I'm only looking at this right here. Passive sellers, passive buyers. Break low, too high. Test, break low. Passive buyers, passive sellers. Break high. Where's the volume? Here, too high. Break low. Buyers, absorption. Where's resistance? There, here. Where's my target? Here. Microstructure. Right here, we've got to be very alert. Let's watch it together. Microstructure. This is advanced processes, and I kind of consider this an advanced degree in trading. You want to learn something different? Now, by the way, you may not want to learn anything different. Bring what you have to Trader Lab, because that's what Trader Lab is all about. Bring your stuff. Like, you show me yours, I'll show you mine. You know what I mean? It's very simple. There is not a right or wrong way to trade. So let's throw that out the window. I only work with an idea of throw all the superfluous stuff away. It may be the reason you're having challenges, because you're depending on a third-party indicator or process that does not have a statistical edge. And it's very difficult to determine your edge unless you're using anchored inputs. If you have too many variables, it can't be measured. And that's where we all run afoul of gaming theory. Because if we don't measure it, then we're just gamblers. And gamblers do win, but they don't stay, they do not beat the house. So for traders, if we extrapolate out the business we're in, it is not predicting. It is specifically alignment and then random outcomes in a random distribution of outcomes because we're in a random environment. So if you can align and use statistics and whatever else you get your hands on that you vet that has an edge, you'd be trading towards this. And I'd be in this trade if I wasn't visiting with you. Always makes me wonder. So is everybody with me? This was our short. This is our target. Now there's our absorption. Now we've got to be very, 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 very attentive now. Is everybody tracking? I hope you're getting something out of this. Please give a thumb up in YouTube. And by the way, there's a link down there. If you're interested in Trader Lab and what this is and how it might, subject to the work you do, give you an edge and maybe help you get further along in your development, let's watch what happens here. This is a critical location of behavior. Let's watch it. This might be, and I don't call trades, along to here and out and up here. Let's see what happens. So we're looking for a trigger, and I don't call trades. I don't want you guys taking my stops. They annoy me. Why should you get annoyed? I accept them, but I don't have to like it. Why is this a potential long? Because the buyers are here. The buyers are here. This is the retail price, 67% probability, and it never has to get there. So, and what's tipping me off here for the potential long is what happened last time we were down here earlier. That's why I'm looking again at the buyers. Now we can still take this out and revert. So I'm looking for longs, right? And I'm going to leave it at that and let you guys fill in the blanks. Alexander, hi there, Alexander. Yes, I do trade ETH. But I find ETH is mostly mean reversion trading. Same as this. So outside in. So this long, as an example, is to come here and, maybe here and up here, outside, rotational trade. Now, the thing I want to point out to you guys, and this is don't take this as I told you so, because that doesn't exist. Let's throw the nonsense out the window. There's no prediction. What do I know? I know the condition of the market. What else do I know? I know the market is long and I'm in two-sided rotational trade. What else do I know? I have a 67% probability of coming down here. And I may still come down there. What else do I know? The buyers were active here, 3,000 icebergs. Remember the concept. If this was a great price to somebody and they bought it, and we come down here and we take it out, think about this. If you went to the store and you perceive this is the retail price for your can of tuna, and these guys figured it was a sale. If it goes on sale again and you come back to the store, might you throw a couple extra in the cart and still be willing to buy what you perceive to be a sale? Right? So if that's the case, then we might get our buyers here again, which sets up a potential long to here, or we get our buyers, the market comes below them, we exhaust, and we get more absorption. Remember, this is still here, and we then come back in here. So for me, I'm looking for longs. If I take a long here, my job is to get risk neutral. So this right here is microstructure break high. Microstructure long is right. I'm going to go down in the fractal. So let's look at this. Buyers are here. Of course, we got those guys, fine. We got our buyers here. Absorption. Sweep. Low, make a low. 66 stops. Remember, for me, if I'm getting long, I got to come across this volume. I broke across. Now, where's my potential support? Here and here. Now, if I take this out, I take a stop, and then I'm going to look at another level. And these are not trade recommendations. Remember, I'm dealing with settlement and this. So I'm kind of pushing in here. This is the area. And I will tell you, if I put a trade on, now right here's where you got to watch. Here's the micro volume. Here was absorption. Buyers came for it there. That is resistance. That's why it's sitting there. The sellers were activated here. The buyers are here, here, and this is your support. Let's watch. So right here, if I was getting long, which I'm not, I'm going to be right in here looking for a break high. If I get a break high, my stop will go under there. So it's palatable stop for me. And then I'm looking for that. And if it falls under here, see the buying here? So now I've got to watch this behavior. Do the sellers, and the sellers can come under here. Do I get the buying, the passive buying? Or right here, I see the passive buyers. And if I can lift here, then it would be game on, not a recommendation. So this is it. Let's see what it does. I've only got 4 minutes. Please give a thumb up if you're visiting in YouTube, a like. It supports the channel. Subscribe. There's a link down there if you're interested in visiting the Bookmap Discord Trader Lab community. It is for serious traders. It is like an advanced degree in trading. It doesn't mean it's easy, and it doesn't mean you won't have to lock yourself in and work. Roll your sleeves up, and you have to pry things out of your head that you believe that actually are not aligned with trading. That's very difficult. It was for me to let go of all the years of work I'd done that turned out that didn't give me an edge. So you notice here, buyers are here. We did not get above this resistance. So it looks like this may still be in play. You've got to watch this very, very carefully. I'm running out of time, so you can watch this. Remember what we're looking for. We need to get above this. And we want, if we come under here, then that's that. Then we're looking at this. But this is the area. So for me, if I'm looking for longs, this is my area for longs. And it could just slam right here and come back. So it can do anything. I'm also going to tell you, if I took a long here, my stop would be here. And I get stopped out. I don't sweat it. I just see it as a probe of the market. That's another reason why when I put trades on, I want range, because I want to get paid for my risk. If I'm sitting, I'm not putting a trade on here to go here, because my risk in this, it just doesn't make any sense. If I put my risk on, I need the range. So now we're taking this out. Let's watch. And we're coming here. I'm really out of time, guys. So if you're interested in this, please come to Trader Lab. You can download the 60 PDFs of structured trades I'm referencing here. There's also a library of webinars and, of course, the Trader Lab community, and you're all welcome to that. And let's get back to our trade here and see if we can see the long setup. And again, I'm not recommending trades. I take stops. We all take stops. So if you're allergic to taking stops, then you're not in business. Every business has overhead and cost of production. You got to kind of recenter your experience of these things, because there isn't a business in the world. Here's some more absorption. This was our 67% probability target. Who knows? See, this is the thing about trading. Who knows? Resistance, that we do know. So now we're looking here. Let's see. I'm going to try to stay maybe a minute longer. I only got 30 seconds left, and let's just see what happens in here. So for me, I'd be stalking a long, but it's not necessarily. I'm just looking at this location for a test and maybe a reversion back to here. That's my next trade. If it falls out and keeps going south, then I certainly won't be taking longs. This is an outside or tertiary target, but this is my primary targets for these shorts. Let's see. We have absorption, we have our sellers, we have our stops, and now we're going to look and see if we get a reversal or a buy trigger in this area. And it can just keep rolling down. Nothing says it won't. So we're looking for triggers, and I can't stay on anymore, guys, so you're going to have to take this one on your own. Don't have it yet. Still seeing the selling. Now we have to see if we can break high. What you're looking for here is absorption, sellers, and the passive side. And there's an iceberg, taking the other side of this and then break high. If we break high, then it tells you these guys were absorbed and then potentially mean reversion, which so far has not happened. So no long. Still looking for it. We'll have to see. It would have to come across here. So for now, I have nothing left except the next target, which is this. Subject to how you operate, you might be flat your short here. Because for me, I trade primarily the targets. So that would be over, and I'd be looking for a long. I don't have a long. So the short would be over, and I'd be looking for a long. And if it does come back above here, then I'd be back looking at a long to come back here, just saying. And it's not a trade recommendation. Like everything in trading, the best you got is maybe. Please give a thumb up and a like in YouTube on the way out. Appreciate you visiting the Trader Lab. If you're interested in the 60 PDFs of these structured trades, plus a library of webinars, and the Trader Lab community, use the link in the bottom of YouTube. You do need to confirm your Discord user email. Also, there's a lot of additional education available in the Bookmap Discord server. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, algorithmic behavior, iceberg, options, more and more and more. It's all there for you, and there is no cost. I have another extended target down here around 60.14 with that value area low around 15, just so you know. Have a great day, everybody. Thanks for visiting Trader Lab. And remember, these streams are available exclusively to Bookmap Discord, Trader Lab participants to reverse engineer, screenshot, circle arrow, and build out your library. Take care, everybody, and I look forward to meeting you in the Trader Lab.